In a world that thrives on global trade, what happens when a major economy decides to change the rules of the game? The answer is simple: nothing stays the same. You've probably noticed rising prices on products you use every day, from the latest tech gadgets to the cars you drive. But have you ever wondered why? The truth lies in the tariffs imposed by former President Donald Trump, tariffs that are still reshaping economies, businesses, and your wallet even in 2025. In this video, we're diving deep into the real, ongoing effects of Trump's trade policies, how they've impacted everything from your grocery bill to the stocks you invest in. By the end of this video, you'll understand exactly how these tariffs continue to affect your everyday life and what that means for the future of global trade. Stay with us as we break down the truth behind Trump's tariffs and why they matter more than ever today. Trump's trade policy primarily revolved around his America First agenda, which emphasized reducing the trade deficit and encouraging domestic manufacturing. His administration introduced tariffs on a wide range of goods imported into the United States, with the most notable targets being steel, aluminum, solar panels, and electronics. These tariffs were largely framed as a national security measure, invoking laws like Section 232 of the Trade Expansion Act of 1962. The reasoning behind these tariffs was to reduce America's dependency on foreign goods and to push manufacturers to relocate jobs and production to the U.S. In 2025, the scope of these tariffs has expanded. New tariffs on products like semiconductors, copper, and pharmaceuticals have been introduced. For example, tariffs on semiconductor imports are set to rise to 25% alongside tariffs on pharmaceuticals. One of the most impactful tariffs to date is the Section 232 tariff on steel and aluminum, which continues to affect industries across the board, from construction to automobiles. These tariffs have been extended to include additional steel derivatives, impacting everything from car parts to appliances. In total, Trump's tariffs have targeted over $1.4 trillion worth of Chinese, Mexico, and Canada imports. And by the end of 2025, tariffs imposed on steel and aluminum are expected to raise $4 billion in revenue for the U.S. Treasury. So, how does this affect you? These tariffs make everyday products more expensive. If you've recently bought a new phone or any electronics, you've likely seen prices go up. That's because these products often rely on foreign components and materials that now cost more due to tariffs. Similarly, you might have noticed the prices of household appliances, like refrigerators or dishwashers, creeping up. Construction projects, whether it's building a new home or fixing a roof, are also getting more expensive because steel and aluminum, essential for construction, are now pricier. The immediate effect of Trump's tariffs on the U.S. economy was an increase in consumer prices. Import tariffs meant higher costs for goods that relied on foreign-produced raw materials. For example, industries like automotive manufacturing, which rely heavily on steel, saw production costs rise significantly. As a result, prices on consumer goods such as cars, appliances, and electronics also increased. Economists warn that tariffs could lead to inflation, which eats away at household budgets. According to a 2025 study by the National Bureau of Economic Research, U.S., consumers paid an additional $51 billion in tariffs between 2018 and 2023. Despite this, the tariffs did have some positive effects on U.S. manufacturers. By protecting domestic industries like steel and aluminum, the U.S. government aimed to boost local production. While some sectors saw growth, the net economic impact of these tariffs has been mixed. According to recent reports, tariffs on steel and aluminum have resulted in a modest increase in U.S. steel production, but have also caused a decline in other industries that depend on these materials. A broader concern is the potential impact on job markets. In 2025, it's estimated that the tariffs on key imports, such as those from China, Mexico, and Canada, could result in a loss of approximately 400,000 jobs across various sectors. Despite the growth in some manufacturing jobs, these losses are a result of retaliatory tariffs, which have harmed U.S. exports. Additionally, the U.S. economy's GDP has seen a 0.2% decrease annually due to the trade tensions and tariff escalation. For the average American, this translates into higher prices for common goods. For example, the price of cars could rise significantly. If you're planning to buy a new car, you may notice it costing more than you expected due to the increased price of steel and aluminum used in manufacturing vehicles. If you work in an industry reliant on imports, such as agriculture or technology, you could feel the effects through job insecurity or reduced wages. Moreover, for those with 401k investments or involved in stock trading, this uncertainty can create volatility in stock prices, affecting retirement savings and investment strategies. If you're not a direct investor, these market fluctuations can still impact your savings and insurance premiums. Trump's tariffs have not only affected the U.S. economy, but also reverberated across the globe, particularly among the U.S.'s main trading partners, China, Mexico, Canada, and the European Union. China was one of the main targets of Trump's tariffs. The trade war with China, particularly under Section 301, led to tariffs as high as 25% on Chinese goods. In response, China retaliated by imposing tariffs on U.S. agricultural products and industrial machinery, disrupting key sectors in the U.S. economy. The trade war has severely affected U.S. farmers, especially those who rely on the Chinese market for products like soybeans and pork. By the end of 2025, China's retaliatory tariffs on U.S. products will likely have cost the U.S. economy $1.7 trillion in lost exports and higher consumer costs. The tariffs also exacerbated the supply chain disruptions that started during the pandemic, which in turn increased global inflation rates. Fast forward to 2025, and the tariffs are still in place. China's retaliatory tariffs continue to target approximately $13.9 billion worth of U.S. exports. While the U.S. has tried to maintain pressure, these tariffs have only deepened the divide between the two countries, leaving U.S. businesses scrambling to find new markets and adjust to the higher production costs. For consumers, the ongoing trade war means higher prices on a variety of products. If you're a farmer, you might find your products less competitive internationally due to retaliatory tariffs, leading to fewer sales and potentially lower incomes. On a day-to-day level, you may notice higher prices for everyday products that are either imported from China or rely on Chinese manufacturing. This includes electronics like smartphones, laptops, and televisions, which often get hit with higher import duties. The European Union (EU) has also felt the brunt of Trump's tariff policies, particularly on luxury goods, machinery, and agricultural products. As one of the largest economic blocs in the world, the EU has responded with tariffs of its own, hitting American goods like bourbon, Harley-Davidson motorcycles, and jeans. According to a 2025 study, European retaliatory tariffs on U.S. goods have cost the U.S. economy $3.4 billion in exports. These retaliatory measures have created volatility in the stock market. The EU's response to U.S. tariffs has led to decreased investor confidence, particularly in sectors tied to exports. The EU's technology sector, which exports high-value machinery to the U.S., has also been negatively affected. Moreover, investors in both the U.S. and Europe have faced uncertainty due to ongoing trade tensions. If you've ever bought an imported European car or enjoyed a bottle of fine wine or cheese from Europe, you may have already seen the impact of tariffs. The prices of these goods have gone up, and if the trade war escalates, you may see more European imports become unaffordable. For those who work in industries like tech or manufacturing that rely on European imports, rising production costs could mean fewer jobs or reduced wages. If you live in the U.S., higher costs of imported goods from Europe are likely to hit your pocketbook. Trump's tariffs have not been limited to China and the EU. Mexico and Canada have also been affected, particularly with regards to steel and aluminum imports. These tariffs have raised prices for goods manufactured in both countries, impacting industries that rely on North American trade. For instance, the auto industry, a significant contributor to the U.S. economy, has seen higher production costs due to the steel tariffs. The U.S. automotive industry heavily reliant on imports from Mexico and Canada, has faced significant price hikes and supply chain disruptions. If you own a car or appliance that uses steel or aluminum, or if you rely on Canadian or Mexican imports, you felt the impact. These tariffs have driven up the cost of everyday items, and jobs in manufacturing sectors that rely on these goods have been threatened. In conclusion, while President Trump's tariffs may have been framed as a way to protect U.S. jobs and industries, the long-term impact has been mixed. For businesses and industries relying on global trade, tariffs have created both opportunities and challenges. For everyday consumers, the results are more straightforward higher prices for many goods and greater economic uncertainty. As we continue into 2025, the full extent of these policies will unfold. But one thing is clear: Trump's tariffs have reshaped the global economic landscape in ways that will affect everyone from farmers to tech enthusiasts. If you found this breakdown helpful, make sure to subscribe for more insights into how global economic policies impact our daily lives. And don't forget to like this video to help others understand these crucial issues. Thanks for watching.
Reduced SPR is not just a statistic, it's a potential cause for concern. During winter months or times of geopolitical turmoil, the SPR has traditionally acted as a buffer to prevent sudden fuel shortages and price spikes. With the reserve nearly halved, consumers could experience longer wait times at gas stations, higher prices for heating oil, and even disruptions in electricity supply in regions that depend on petroleum-based energy generation. This scenario translates directly into higher household expenses and greater uncertainty about energy security. Chapter 7: Global Ripple Effects, Shifting Alliances and Market Dynamics. While the immediate focus remains on North American energy and trade, the consequences of these policy shifts ripple through global markets. Oil is a truly international commodity, and any disruption in the North American supply chain has the potential to influence prices and trade patterns worldwide. If Canada redirects its oil exports to alternative markets in Asia or Europe, the global balance of supply could shift dramatically. For instance, a 2 million barrels per day MBD reduction in global oil supply could cause Brent oil prices to peak at $92 per barrel. In practical terms, this means that households across Europe, Asia, and even emerging markets could see their energy bills rise by 5–10%, further squeezing budgets and stifling economic growth. Globally, higher oil prices affect everyone. In Europe, where many households already struggle with high energy costs, even a modest 5% increase in fuel prices can translate into hundreds of extra euros per year in heating and transportation costs. In developing countries, where energy expenses make up a larger share of household income, the impact can be even more severe, leading to decreased disposable income, reduced access to essential services, and slower overall economic growth. Furthermore, higher energy prices tend to feed into the cost of goods, meaning that everyday items like food, clothing, and household appliances will become more expensive. Chapter 8: Political Fallout and Future Prospects. With an election year looming in the United States, the trade war has rapidly become a contentious political issue. Lawmakers are now divided on how best to respond, whether to roll back tariffs in exchange for concessions or to stand firm, even at the risk of triggering a full-scale trade war that could hurt both economies. Political uncertainty doesn't just affect stock markets and trade figures. It hits home for ordinary people. Prolonged uncertainty and contentious debates can dampen consumer confidence and stall investment, which in turn reduces economic activity. Recent surveys by the National Retail Federation estimated that American consumers could lose between $46 billion and $78 billion in spending power each year if certain tariffs are implemented. For everyday families, this means fewer outings, reduced discretionary spending, and potentially even job losses in vulnerable sectors. For instance, a study by the U.S., China Business Council, and Oxford Economics estimated that the United States lost 245,000 jobs as a result of the 2018-2019 trade war. The impact on household budgets could be profound. Lower consumer confidence means less spending at restaurants, fewer vacations, and a more cautious approach to major purchases like cars and homes. In turn, businesses facing uncertain demand may delay hiring or cut back on expansion plans, creating a vicious cycle of economic slowdown. As we have seen today, the potential cutoff of Canadian oil exports and the unfolding trade war over tariffs is much more than an abstract economic maneuver. It represents a strategic pivot that could redefine energy security and reshape the daily lives of millions of people. How do you see these changes impacting your daily life? And what measures do you think policymakers should take to safeguard both economies?